Hello everyone, and how's it going? I hope that you're having an amazing day and a very profitable run in the markets after such a long time. So, if you're watching this video, chances are you have decided to either buy or hold on Palantir and you're wondering, where can this stock go? Can it recover its former glories back into the heydays and to also even start a new cycle of higher bullishness? So, as we know, over the past few years, the job market has been quite uncertain and unstable, and pretty bad for many others. Inflation at the same time has really been melting away people's savings in economies that really used to be deflationary. Like, for example, if you ever went to the restaurants near, in the near past, then you know what I mean. So, really, when all that we believed and assumed to be here forever has been whittling away, we gotta learn on relying on ourselves, not just to leave the uncertainties to fade itself. So, in order to secure our own financial futures, we absolutely have to find the growth opportunities of tomorrow, and the ones that can multiply our portfolios by many times, exponentially increasing the capital that can be available for further investment. Essentially, we gotta find a golden goose. And for many, Palantir has always been one of those stocks. Much more than just another tech stock collecting funding in exchange of market share growth, like so many more listed on a Nasdaq. It is a major company that plays a role as like an indicator of how healthy the economy is and how risk averse or risk oriented the capital is. It has enough clout and mystery around it to arouse the market's curiosity and people's tendency to follow the trend. It is a company that people would often view equally as the risk appetite of the market, alongside Tesla or Apple or Nvidia. So the fact that Palantir can rise and fall with the tidal waves of risk capital is a limited but very useful predictability that can make it a crucial stock to follow in the market. So in this video, we're going to take a deep dive into Palantir and to see whether it really deserves to have a place in your portfolio. So before today's video continues, if you want to watch more Palantir related analysis, as well as many other companies that I cover, please check out my channel for more and to stay updated on the latest. So Palantir traded as PLTR on a Nasdaq had a stable day in the market. It reached a high of around $24 and a low of $23. Over the past 5 days, the stock moved sideways, slightly decreasing by 0.34%. And looking at the big picture in the past month, Palantir's price went up by a substantial 33%. And over the last 6 months, it soared by a very impressive of 61%. This is mostly because its results are very strong and because it has successfully surged on the AI trend. Whether that's going to be really profitable or not remains to be seen. Obviously right now, the current stage, things are on the hopeful. But let's not forget that once the reality sets in, if Palantir really has to make money with AI, then that's another set of questions, and that's a very different conversation that we would be having. It's similar to how when an EV back in 2020 and 21 first began trading, nobody was thinking about the profitability. We're just thinking about the growth, and the growth fueled by speculation. In this case, Palantir, I would say that, it has a little bit of that as well. So the recent volume for Palantir is around 93 million shares, a little bit below its average of 106 million shares. The volume is important in stock trading because it shows how many shares are being traded, and even though the recent volume is slightly lower than usual, it still indicates very strong interest on the stock. So high volume usually means very strong investor interest and validates a price trend. Now, it's very important to understand volume and its role in stock trading. If prices go up or down with high volume, it shows strong investor participation and supports the legitimacy of the trend. On the flip side, low volume during the price movements could mean a lack of commitment from traders and casting doubt on the sustainability of the trend. Traders could use volume alongside price action to make smart decisions and improve the accuracy of their strategies. So, Palantir has been catching the eye of everyday investors for a few reasons, and pretty good ones, I would say. Like its perceived potential for high growth, a very good business model or a successful business model, and minimal dilution over the past, few months and even years. So regular investors often look into stocks that can grow a lot, and Palantir seems to fit the bill in this matter. The company's positive cash flows shows that it's financially viable and stable, making it a pretty attractive stock to have, especially considering that we're talking about the tech stocks. Palantir's proven business model also lines up with what regular investors like. So, investments that are profitable in a sustainable manner. Now, just like everything else in life, there are also challenges that investors commonly face. And Palantir is unfortunately not exempt from those considerations. One of those that not everyone likes is the fact that it's a tech stock. So you really have to have some technical know-how when it comes to like researching stocks. Palantir's business, especially its work in data analytics, might be a bit hard for some people to fully grasp. And overcome this challenge would mean that regular investors really need to keep learning and to find reliable sources of information to make good decisions. Another factor to consider is Palantir's nature as a data analytics company with ties to some complex and not so liked institutions. Some wonder if the hype around the stock might just fade away, similar to how people realized that they shouldn't be overly excited about electric vehicles after the bubble burst. So, considering the current state of the market, it's really worth asking whether the excitement around artificial intelligence will eventually just fade away, potentially causing heavy losses to those heavily invested in that area. So, patience is super important in the stock market, and regular investors may find it tested. Palantir's long history of development shows that it can really handle challenges very well, which is a good news for investors looking for companies that may navigate difficulties successfully. However, the real challenge is holding on to investments in the long term, especially when the market gets a bit wild. Hype and speculation often influence the regular investors, and Palantir isn't immune to those trends. It's crucial for everyday people like you and I to separate genuine value from market hype. And when it comes to Palantir, like its positive aspects, like the strong ties with public sector, and also the fact that it's cash positive, should be carefully considered against the overall market sentiment. This would involve looking into company's basics and the future potentials rather than just following what's currently popular. So, Palantir's attractiveness really goes beyond the financial numbers. Like, it has very solid relationships with public sector, it resonates with regular investors looking for investments with good fundamentals. The positive cash flows can also increase its appeal because you don't have to worry about any sort of dilutions. So really, it has a lot going for it. Now, its challenges are pretty much the other side of the coin. So, depending on the public sector, makes it pretty vulnerable for potential risks of like budgets, like spending cuts, and also just change of contractor, really. Like, I don't know if you guys remember recently, there were some speculations about could the army cut Palantir off from its data analytics contract and so on. Is it possible that the NHS would find somebody else to handle its data and so on? So, like, it's not it's not going to be a purely it's not going to be considered on a purely commercial basis because we would be in the public sector and there are other factors at play. Uh, like the concerns about data privacy and ownership, coupled with very controversial reputations, the possible ties with intelligence communities, and I would say sometimes whatever Alex Karp says, like it used to be cool seeing him calmly conversing with like CNBC journalists. Actually, I can't remember which one it was. Maybe all of them. In I think it was Aspen and or Davos. Like it used to be cool. When will it stop being cool? Right? When will we start seeing him just as an intelligence community show? Like, is that a possibility? We have to factor this in when we want to invest in such a company. So, really, there are pros and cons, and the company is getting attention from us because of its potentials to grow very, to grow very high in the share price. Its business model that's decent, that's cash positive, and that can be scaled. It's very minimal dilution and so on, but obviously there are also challenges. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains, and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, in summary, having said all this, we've considered the company-specific aspects, we've considered the macroeconomic aspects, we've looked at the pros and the cons, but now the question is, do you want to buy it? Should you buy it? So, I would say that for any sort of risk-seeking portfolio, Palantir is a pretty good stock to own as a baseline of your potential of like your stock portfolio's growth potential. And if you want to have any sort of risk taking, and it's perfectly understandable that you would prefer not to participate in too much risk in those uncertain times, like I do, believe me. But if you want to have some sort of risk exposure, eventually at least, to some sort of tech stocks, Palantir is a good start. And even though right now it's reaching like historical highs, or it's getting closer and closer to historical highs, there's no indication that it's going to slow down anytime soon. In fact, the AI craze may not slow down anytime soon, right? So despite all my reserves about like following a popular trend, it's possible that in the meantime, you're going to enjoy pretty handsome growth thanks to Palantir. So it would be a smart move to own some Palantir and to just gradually increase your exposure over the next, say, 6 to 9 months, and then go from there. But of course, we're no longer in the phase of active trading Palantir. I would say that like long-term holding and investing into this stock is a much better way to go.